Hi, it's Adriana Senior from Cetera here, and we are kicking off our Invested in More series. Who better than to kick off with than Gene Goldman? Gene, thanks for being here today.
Thanks for having me on your show.
Great. Gene and I are actually office mates in our Los Angeles headquarters, but we have different roles. I run PR and communications for Cetera, and Gene is our Chief Investment Officer. Gene and his team are preparing for 2020, new decade ahead.
Definitely.
And there's a lot in store. So Gene, what are you working on and thinking about for 2020?
Sure. Have just finished our 2020 market outlook, and our three themes are, first of all, think about this. We're in the longest economic expansion since the birth of our nation. How long will this continue? What can slow it down? Second of all, we do have a little bit of a trade war between us and China. Whether it's phase one, phase two, what's going to happen, what's the impact on economic data. And the third thing, probably the biggest thing, is that we do have an election in 2020, a presidential election. Who will be our president for the next 4 years, and what's the ramifications around the economy and financial markets?
Mm-hmm. And elections definitely inspire uncertainty, and investors loathe uncertainty. Mm-hmm. In 2019, you caused the phrase cautiously optimistic. Are you still cautiously optimistic?
That's pretty funny. I do get a lot of ribbing from Joe Kernan on CNBC about that. But yes, let's think about this. At the end of 2018, when we started talking about being cautiously optimistic, you look at 2018 data. We saw GDP was up 3%. We saw earnings growth up 20%. But we saw stocks were down about 4.5% for 2018. 2019, a very much of a different scenario. We saw GDP up about 2%. Earnings growth is flat, maybe at 1%, but stocks are up 27%. Clearly pure multiple expansion. So we're cautious going forward, as we do believe that valuations are a little bit elevated right now.
Mm-hmm. And research shows that investor behavior is the single biggest detractor of investment performance. What advice would you offer to an advisor or an investor who's not feeling cautiously optimistic right now?
So an advisor is being cautious. We do point to a few things that an advisor can do and their client can do. Number one, we would look at rebalancing back to long-term investment objectives. Think about during this bull market, stocks really outperform bonds. A lot of portfolios are a little bit out of whack in terms of stocks to bond exposure. Definitely rebalance back to long-term objectives. Number two, diversify equity risk. Everyone loves large cap growth. We love these FANG stocks, but diversify into value, into small cap, into international developed, and alternatives too. And number three, the most important point is manage your fixed income risk. Fixed income should be your safe money, but a lot of advisors in the search for higher yield really jumped in and bought more aggressive fixed income. Scale some of that back, go back to treasuries.
Great tips.
Thank you.
As people monitor the markets and economy, there are a number of data sets or indicators that experts like you keep close watch on to anticipate what's next. Mm-hmm. What are you watching closely these days? Sure,
there's lots of data that we look at, but our three sort of real-time data perspective we look at is, first of all, we love to look at the yield curve. The yield curve gives you a great indicator where the economy is going. Think about this, short-term yields should be lower than long-term yields, pretty straightforward. But if short-term yields start to move higher, start to approach long-term yields, banks are less incented to lend money, which could cause some concerns around the economy. Number two, copper. And I know you're thinking copper, but think about it. We talked about this before. I think you said to me yesterday, copper, all we use copper for is in pennies and Moscow mules. But copper is bigger. Copper, think about this. The average American home has about 500 pounds of copper built in. The average American car has about 60 pounds of copper. Wires, tubes, pipes, all this stuff built in. It's a great real-time indicator of how the overall manufacturing economy is doing. And the third data point, it's not really real-time, but it's a good indicator. It's just survey data, like PMI data, Purchasing Managers Index. There you're getting surveys of hundreds of purchasing managers all across the country, and they're asked these questions where the economy is going. It has a high correlation to stock market returns.
And where can advisors find all of this data?
All this data, you can always look at websites and you can look at online, but the best thing to do is that, especially for our Cetera advisors, we have a publication called the Chart Book. The Chart Book takes all the data points, summarizes it, gives you the time series, and gives you an overall perspective of where we are in the economy, what's the direction of economic data. Again, it's the Chart Book. It comes out once every quarter.
Great. There's clearly a lot to navigate when it comes to an investment strategy. What other resources do you and your team provide that advisors can use?
Sure. We've estimated we have about 700 touch points to all of our advisors. And what we've done, we've organized them in sort of these broad areas. The first broad area is around market perspectives, the daily email, weekly, monthly, quarterly commentaries. The second area is advice around portfolio construction. How much should you be in growth or value or small cap or large cap? The third area is just recommendations on money managers, which mutual funds to recommend. So this is like our research select list, for example.
Great, lots to offer.
Thank you.
Oh, and people can also catch you on TV and online. You're a frequent guest on CNBC, a frequent contributor to Forbes, and also quite active on social media, correct?
Well, as head of our PR and media efforts, I mean, I have to thank you, so thank you. It's great
you're welcome.
It's great to be your office mate.
So our series is called Invested in More because at Cetera, we believe that we're more than the transaction. And we believe that everyone does what they do because there's more that life offers. Gene, what's your more?
Oh, my more, it's a great question. So let me go back to when I first started in the industry. My first year, I made a recommendation on a mutual fund. And we have a list, and I made a change. And then a year later, I'm at our national conference, and this advisor came up to me, sweet woman. She came up to me, she's like, Gene, that fund that you changed a year ago, my client and I followed you, and you saved us money. Thank you. And then I just realized that we're not just creating lists of funds. We're not just building a portfolio that gets laser. We're actually doing stuff. We're doing investments that advisors and their clients are using to meet their clients' long-term investment objectives. And it's really important to us. So it's more than just lists. It's more than just portfolio. It's really everything.
It's life goals.
Life goals, yes.
Yeah.
It's more. So.
Great. Well, thank you for being here today, Gene.
Thank you. And hopefully you'll let me be out on more of your videos.